Okay, so why are we here today? Tax and asset protection. The title of today's presentation is How to Slash Your Tax by Thousands on Thousands of Dollars and Keep the Greedy, Gold-Digging Scumbags Far from Your Assets. Who's ready for that? I'm going to show you in the next hour and a half why what I'm saying is the truth. Who here thinks they pay far too much tax? Who here loves to pay lots and lots of tax? There's one guy there. Who here knows that there's a real risk to your assets today in Australia with asset protection lawsuits increasing all the time? I'm going to show you some facts very shortly. Just a bit of background on myself. As pointed out, I'm a lawyer and accountant, but also an investment advisor with 20 years' experience. And founder of a one-stop shop company which provides law, accounting and financial planning. That's my wife and my business partner, Grace. Just so you can see the full family here. Who here has heard Joel Bauer speak? Anyone? Yeah, Joel Bauer says, to build credibility, it's important you've got a family. If you don't, just find one. This actually is my real family, by the way. I didn't just find him. That's our oldest son, William. Got his dad's good looks. That's our twins. And that's our youngest. Aren't they cute? Yeah. All the ladies go, ah. Okay, so why am I here? To do two things today. One, to help you slash your tax by thousands on thousands of dollars. Who would like to slash their tax by thousands on thousands of dollars? Because would you agree that if an accountant is not a glorified bookkeeper, which let's face it, many accountants are, would we agree? A glorified bookkeeper, but actually becomes a wealth creator as part of your team, would you not agree that that's going to build your wealth as much as anything else that you're doing and learning this weekend? If I can show you how to save $20,000 with one trick, is that worth something? Absolutely. And protect your assets from the greedy, gold-digging scumbags. And you'll see why I say that as we go on. Again, are we keeping the money that we make? One of my favourite quotes, and I know 21st Century is very big about this, and we certainly at 21st Century Accounting are very big on this, is knowledge and education, which is what it's all about. Because right now, according to the media anyway, we're moving into recessionary times. Certainly, we're moving into more challenging times economically. So would you agree that the educated are the ones who are going to stand this time? Agreed? So the educated ones in wealth building and tax asset protection are the ones who are going to stand. So now we're going to talk about how to keep the greedy, gold-digging scumbags far from your assets. What I'm going to do here is just ask you something. Let's just sit down and get a bit personal here. Who here has been involved in a car crash? Put your hand up. Keep your hand up if you expected that car crash and knew it was coming. Okay, no one. Okay, put up your hand if you ever had a serious illness come on you. Keep your hand up if you expected it to come in and plan for it. Interesting, isn't it? Okay, all the ones who had car crashes, put your hand up if you own a car. Pretty much everyone. Put your hand up if you own a car. Keep your hand up if you don't have insurance on your car. Just one or two. Yep. Okay. Interesting, isn't it? So why have we got insurance on our car? Anyone? Why do we have insurance on your car? That's one, but what's another reason? Peace of mind? You're thinking third-party insurance, but insuring your car in relation to, say, damage to your own car. Why would you do that? Protection. Well, you've got a $70,000 car. You want to make absolutely sure, don't you, that if you suddenly crash the car, you don't have to fork out 70 grand. Is that correct?
Or someone else's car is even worse.
That's right, or someone else's car is even worse. So what you're doing is you're insuring yourself so an unexpected liability won't hit you, correct?
Yep.
That's right. Why do we go to medical checkups and things like that? Because we want to prevent cancer, correct? Would we rather A, get cancer and be cured and be a great testimonial for the Academy, or B, would we rather prevent it in the first place? Put your hands up if you'd rather prevent it in the first place. Pretty much every hand, that's right. Okay, so what I'm saying here today is that calamity and disaster strike when we least expect it. Would you all agree? At some stage, everyone in this room, I'll guarantee you now, and this is not doomsday, it's just a fact, you will experience some kind of calamity or unexpected event or disaster in finances, your personal circumstances. Agree? It happens to all of us. As the old saying goes, shit happens. Excuse the pun. But that's the truth. And so what we're doing today of asset protection is very simple. Calamity strikes when you least expect it. Now, we've all established that all of us insure our car. Correct? Or pretty much most of us. How many in this room, put your hand up if you had a net worth over $500,000 and you wouldn't mind if you lost the whole lot tomorrow? Put up your hand if you would worry if you lost all your wealth tomorrow. Pretty much everyone. Correct? Because why? Would you agree that if you lost all your wealth tomorrow, it would be very stressful for your family? The fact is, money worries cause breakups financially, correct? Partners break up. I know in my own marriage, we have been through a disaster in the past, and it certainly put a little bit of strain on it. Many relationships break up because of money, correct? Yeah, how many of you have insured your assets? Put your hand up if you know 100% today that all your assets are so well structured that no one can ever touch them. Put your hand up. A few people. Okay. So the rest of you not. So essentially, you may have $300,000, $200,000, $500,000, $1 million, $2 million net worth, but effectively you're not insured for it. Isn't it interesting that we all would insure our car, but we won't insure our assets, correct? Who wants now, after what I just said, peace of mind to ensure that your wealth that you build remains intact? Put your hand up. Absolutely. Let's have a look at some facts. Do we need to protect our assets? Because the first thing is, well, is it a risk? So let's just have a look at some facts. There are 4 compelling reasons why you need to protect your assets today to keep the golding scumbags far from your assets, okay? Firstly, reason number 1, lawsuits are increasing daily. Let's look at some facts. The world's most litigious state right now is New South Wales at number 2. So where we are right now today is number 2. That means only one state in the whole world is worse than this. Anyone want to guess which one? No, California. Texas is 3, Florida is 4, Queensland is 5. That means the second worst state per head of population for being sued in the world right now is New South Wales. It's worse than Texas. Who's shocked by that? It's pretty shocking, isn't it? In New South Wales, the probability of being sued on average is 3 times in your life. Is that a lot? It's 3 times in your lifetime. In California, Amara, it's 5 times, and one of them on average will wipe you out financially completely. See, lawsuits is becoming a business. Remember, there's different ways to create wealth. One is you create wealth, like coming to the academy and learning. The other one is plunder somebody else's. Correct? That's what burglars do. They plunder somebody else's assets. So really, there's people right now in the US who make a business of it. They go out there, this is actual fact, they'll get themselves injured so they can then sue and get a few $1 million. So it's actually a money-making business. So if I promoted an opportunity for you to get rich by going out and getting injured and doing lawsuits, who's interested? That was a joke, by the way. But seriously, in the US, it's virtually become a business. You've got ambulance chases, which literally happens where people go, lawyers drive around, they have people on street corners where there's regular accidents, waiting to jump in there, give a business card and get the deal. So lawsuits are increasing all the time. The average lawsuit in 2004 was 1.8 million. 2006, 61% successful lawsuits. So if you think you're immune, I hate to tell you, but another thought coming. And the reason I say this honestly, because as a lawyer, as well as an accountant, a lot of my time has been also looking at people's plans or situation to see if they're protected from being sued. Now, people come to me about suing others and all this kind of stuff, and the fact is, people soon find out what it's like if you're not protected. I had a situation about a few years ago where I had a financial planner come and see me. Now, this guy had built up about $3 million of assets over about 25 years, working like 60 hours a week. Came in with his wife, massively stressed because what had happened was this, and a situation that can happen to anybody. The financial planning industry works in that they've got this list of what's called approved products, which means that you pretty much have to, as a financial planner, invest in the products which are listed. So unless it's approved on the list, you can't recommend. So if you've got some juicy offshore opportunity, you're not supposed to recommend it. You understand it so far? So what happened was he found a juicy offshore opportunity and he put all of his clients into the juicy opportunity. And the short result of it was over 11 years, made a lot of money. But then about 4 years ago or something, the whole investment opportunity went broke and all his clients lost money. Now, the problem was this. Because it wasn't on the approved product list, what do you think the insurers said about covering him? Did they agree to cover him? No. I mean, normally insurers are nice guys and very charitable and they never enforce fine print against you, but this time, sadly enough, for some reason they went against their normal nature. I know, being a bit cheeky there. But very simply, he came to me greatly stressed, and of course his wife was even more stressed because that was a family home. They were at risk. Everything was at risk. Sadly, we did do some stuff for them, but we couldn't completely do it. 6 months later, the pure stress of it basically separated their marriage. And so when financial worries are at stake, this is what happens. It affects every area of your life, because who would agree that money affects every area of your life? Would we agree? Every area of your life. We've all heard the saying that says, you don't need money to be happy. Well, we know that's not true. I mean, life isn't all about money, but sure, end of the day, we need money to do the things we do each day, don't we? So money is important, and preserving your wealth that you build, especially at the academy here as you're learning to build your wealth, you want to make sure that you're keeping the taxman's greedy hands off it and you're keeping the scumbags away. I'm almost going to start doing some opera singing in a minute. Everyone's sort of listening and... Want me to do some opera singing? Yeah. Oh, he wants to say no. Okay, here's some ludicrous labels. This is what's happening now in the world. Do not eat on an Apple iPod. Do not use while sleeping on a hairdryer. This product is not intended for use as a dental drill, electric rotary tool. I like that one. This costume is not suitable for flying on a Superman costume. It's getting a bit sad, isn't it? I see some crazy ones. I still remember my cousin, when he was 4, watching Mary Poppins and getting very inspired. So he climbed on the roof of an umbrella and jumped off. That was the end of his leg for a few weeks. But in other words, this is what's happening now because people don't like to be responsible. They like to sue. I mean, we've had situations over in WA where I basically have been based, where I've seen like councils now or parking areas where they've had like regular picnics and they've banned people from having picnics there or putting on functions there because they're concerned of lawsuits. Recently I went to a park with my kids and there was no swings there. But why wasn't there swings here? I checked and the council's policy was no swings anywhere in case they got sued. So this is the reality of the environment we're now in. So look, there's a lot of examples. I've given one. In WA, there was an example of a guy who goes to a pub. He absolutely gets himself drunk. The barman's got his keys. So he says to the barman, he says, look, mate, I want my keys back. The barman says, no, mate, you're drunk. He goes, give me my expletive-censored keywords back, my keys back. Barman said, listen, mate, you're drunk. I'd rather not. He said, if you don't give me my expletive-censored keywords back, he said, I'll hit you. So, of course, the barman said, fine, mate, it's on your shoulders. Gave him the keys. Bloke goes out, jumps into the car, drives off, bang, hits the pole, smash, injures himself. So what does he do then? He sues that naughty pub for giving him his keys back. And he wins the case. In the US, there was a case of a girl who was having some hot coffee. She then basically, she sues McDonald's because she slipped on hot coffee spilt on the floor and she went flying, injured herself, sued them. McDonald's were understandably very surprised, considering that she won the case, that 30 seconds earlier she'd thrown the coffee at her boyfriend in an argument. In New South Wales, a number of years ago, there was a nightclub which had the manager's residence on the top floor. Somebody wanted to get the nightclub for free, so they broke into the manager's residence to go through that way. The manager comes in, sees this guy in the room with his kids. Now, what would you do if you walked in and saw some strange bloke in the room with your young children? Would you A, greet them and shake their hand and say, thank you for coming to my house? B, offer them a cup of tea, or C, smack their head in? What would you do? Okay, well, you're right. Option C was the one he chose to take. He smacked his head in. He even sued the manager and the hotel and won. There was a burglar who basically broke into a house to steal some stuff. He stole the house. As he went through the remote garage, by mistake, something happened and he got locked in the garage. He was trapped for 8 days in the garage, unable to get out. And he found an old chocolate bar and lived on that. When he finally was released, he sued the householders for emotional stress and nervous shock of being locked in the garage. And he won the case. I'm totally serious. This stuff really is happening. It's absolutely nuts. Honestly, one of the reasons why lawsuits, I might add, are so prevalent and why they win is because we don't have a no-fault liability scheme in Australia. So what it means is, let's just say you've got the councils, like someone gets injured, let's say they dive into a beach or into a sea and hit their head and become a quadriplegic. There's not a no-fault liability scheme. So people have to sue. And then unfortunately lawsuits set precedents. So believe me, lawsuits are a very, very big risk. And we all would agree we insure our cars, do we not, to, even though, who here expects to crash their car in the next week? Anyone? Okay. Are you still going to keep your car insurance? Why? Just in case. Okay. Who expects to lose all your net worth in a lawsuit in the next 6 months? No one. But should you insure it just in case? Do you think it's worth spending, I don't know, 10 grand, 20 grand to insure 500 grand of assets? Is that good? Yes. Is it worth it? When you think about it, to secure and give peace of mind for your family, is it worth it? Absolutely. Reason number 2, insurance may not cover you. Now, we all know the wonderful hearts of our insurance companies, but you've got things called fine print. Bigger, you've got what's called duty of disclosure. Who's heard of the duty of disclosure? Anyone? It means that you have to disclose to insurance company everything that's relevant to them giving you insurance. So e.g., if you basically driving your car or you have a speeding fine, or you get pulled over and get arrested for reckless driving or dangerous driving, you're supposed to ring your insurance company and declare it. Because if you don't, they can actually decline you if you claim on your policy. And we know companies that will do it. Who wasn't aware of that? Normally quite a few people. You're meant to ring them straight away and disclose it. And my wife worked in QBE for about 4 years. Criminal negligence. Now, that doesn't just mean going out and beating the crap out of some poor bloke on the street. Criminal negligence can mean as simple as this. In my company, we've got our premises and we've got a fairly big reception area. Now, at one stage, a big hole came in the carpet. Now, when you get busy in business, I mean, we were told 3 or 4 times to fix it. Who understands that you get busy and you just don't get around to doing it? Is that something we often can do? Just slips our mind? Yeah, like the tenant in a rental property says, look, there's a problem with the rental property, there's a big hole in the carpet, or, you know, the roof's leaking or whatever else, and you say, yeah, I better get someone around there, and for whatever reason you don't. As it turned out, we eventually fixed it, but if somebody had come in, and we've been warned 3 or 4 times, and tripped on that carpet, what do you think our public liability insurers would do? They would argue criminal negligence because we basically failed to act on a risk which we'd been warned about. So basically seen as reckless or deliberate. So insurance may not cover you. You've also got like gynecologists, for example, who their policy ends 5 years after finished practice, but how many of you know that medical people can be sued way down the track? Correct? You can be sued many years after an event. So, and many insurance policies have a cap. A big thing to keep in mind is this. Have damages awards and lawsuits been going up in recent years? Absolutely. In 1976, it was a landmark case when $500,000 was awarded in a high court in a case. These days, millions of dollars is very common. So let's just say that you took out public liability insurance in 1996 for $1 million. Would that be enough today? Probably not. So you may end up getting sued for a lot more, but you haven't upgraded your cover to cover more. You're starting to see the little minefields and traps that we have here. There's plenty of traps that we've got. Reasons 3, creditors and taxes. Business debts of other people, partnerships and group tax. So in other words, if let's say I'm in business with Jamie, for example, and we're running a little company together, it turns out that I've got responsibility for the group tax, Jamie leaves it in my hands, he finds out a year later that I haven't actually paid the group tax, guess who's liable? Jamie can be personally liable. Tax audits. Now we all know how wonderful the ATO is and how they never do anything nasty to you and go retrospective. But unfortunately they do. Who was around when the vineyard schemes came about? The tea tree oil schemes in the 90s. Anyone remember those days? When the ATO targeted all those tax-affected products? Yeah, they basically cleaned house. Now I'll tell you a little story. Who likes a little bit of conspiracy? Anyone? Yeah, I worked for the ATO for about 10 years. And in 1994, the ATO had all these schemes coming on the desks. Did they do anything? No. 96, they had schemes coming through on the desk. Did they do anything? Did they do anything? You can talk. Did they do anything? No. Just want to make sure you're awake and that you haven't died in your seats. 1999, they finally struck. Now, anyone want to guess, why did they wait 5 to 7 years to strike? Anyone want to guess?
They get more money.
Get more money, correct. You think about it. If the ATO waits till they've got lots of people, how much revenue will they collect when they strike? Lots. When I worked there in 92, in 89 to 99, in 92 it was announced that audits were going to become more cost benefit. They wanted to make sure they made a profit on it. So effectively, they know if they spend $50 million on the projects, but they gross to $1 billion, is that a good return for a project? Bit better than internet marketing, isn't it? But you can see what I'm saying. So, pretty simply, these are the risks you face. And 4, you are a target. Business people are always a target. And internet marketers, are they a target? Oh, you bet. You bet. It happened to, this was public knowledge, so I can say it. I know that, but at one stage Stephen Pearce was sued, for example. Stephen's one of the really top elite. Who's heard of Stephen Pearce? Tremendously good internet marketer. You know, great speaker. And he basically got sued in his own business for basically certain things on his site and claimed it was copying and things like that. You got like privacy statements that go on your site. Spam laws are the big one. I know a guy in WA who basically, when the spam laws changed in 2004 and the Anti-Spam Act came in, he went through and of course he had an email list that was massive. Now a lot of his names he'd harvested off the internet because back then you could just go and harvest names and put them on. So the law was changed so you couldn't just go and harvest a name off the internet. Do you all know what I mean by harvesting a name? Yeah, just going on the site and pulling it out. So once that happened, he culled his database down but didn't completely finish the job. A number of the people who were harvested complained, but of course his argument was, well, they were before the Spam Act came in, these ones are after. To make an example of him, they fined him $4 million in his company and $1 million in his own name. $5 million they fined him for basically breaching the Spam Act. There's another guy we heard of who's fined $100 million. Believe me, they're absolutely ruthless on the spam, and it's not difficult to fall foul of the spam laws. It's actually not that difficult. So, one thing in his favour though, many years earlier, he set up companies and trusts and did all kinds of structuring, so when the government came to get the money off him, how much did they find? How much was in his company? Nothing. So what happened to the $4 million fine? They waived it. So then there was $1 million left to collect. They're still negotiating. We're down to $100,000 at the moment. They're around $100,000. Who thinks a reduction from $5 million to $100,000 was worth the investment in his protection? Is that a good return? Good ROI? So privacy statements, things like that online. Again, if you're selling products online and they're defective products, can you be sued? Can you? Trade Practices Act and the Sale of Goods Act in each state. So the Trade Practices Act, on the Sale of Goods Act, you're required to provide goods that are fit for their purpose and like merchantable qualities. Now, if you then sell an affiliate product or something like that, for example, that product turns out to be defective and people cause loss, they may well sue you as well as the person whose product it is and join both parties. Suddenly you've got a lawsuit on your hand. So essentially, internet, as much as anything else, you're at risk, believe me. And especially if you're promoting products or just things you don't know what you're doing. So you want to make sure you're protected. You want to make sure your website got the right privacy statement, it's got the right agreement. You all know what I'm getting at here? There's lots of laws. There's passing off laws, things like on the internet that you've got to make absolutely sure that you're not passing off on other people's products. And, I can be corrected if I'm wrong. I'm pretty sure that the lawsuit with Stephen Pearce, where someone claimed he basically copied certain things from their website. And of course, what do most people do? They just go and copy things off. I know that a guy we know who runs an online business in actually selling legal documents. And what one of his guys did was they found a document that looked good, they copied it and just did a few changes. Next minute they had a notice served upon him and they were going to sue him about the fact that they'd copied the document for damages, everything else. So believe me, in internet marketing, as much as anything else, you're going to have issues. If in business, you're more of a target, you're more of a risk. You understand what I'm saying here? In business, you are responsible. They're going to go after you and your company. Defective laws, defective products, government laws. Now, we all know how wonderful and free our government is at the moment, but who thinks that our government could basically start giving more controls? Do you think we're going to have less controls or more controls? Put up your hand if you think government will reduce controls on us. Put up if you think there'll be less control, there'll be more controls. Absolutely. There's been more and more licensing. You actually look at how much laws, 1 million pages of new legislation gets passed every year. 1 million pages. The Tax Act in 1936, in the early days of it, was about this thick. It's now this thick. So who here thinks that everyone knows every page of the Tax Act off by heart? Yet the basic law says that ignorance of the law is no excuse. So you're expected to know pretty much all that's in the law, otherwise you can be fined. So, believe me, government laws and everything else, there's a lot of stuff you've got to be aware about. As I said, calamity strikes when least expected. So the key is to position yourself and cushion yourself to prepare against calamity. One of the things with myself is I'm really big on health, because years ago I suffered a really, really bad health crisis. When I say bad, I mean it was chronic. I mean, my whole body started breaking down. And suddenly I couldn't use a computer because I get nerve pain shooting up my arms and up my back. I couldn't play keyboards anymore, piano. I couldn't sit down for more than 10 minutes without having agony going up my back. Just my whole body broke down and there's nothing physically wrong with me. Now I went to every specialist, every doctor, just about imaginable. And they all said to me, oh, you can't really see much wrong, you just need to do more exercise. And the more exercise I did, the worse I got. And eventually I went to another doctor, specialist, to do with compensation. And the specialist basically concluded I was making it up. He said, we don't believe this, we believe this guy has grossly exaggerated his symptoms. So, by that time I was pretty pissed, I must admit. So, I was starting to think, what am I going to do here? So I started doing a lot of exploration and got empowered to learn about health myself. So I thought, well, the profession's not going to give me any answers here. I've got to go looking elsewhere. I ended up looking into all kinds of things from healing and, Reiki and kinesiology and naturopathy. I mean, anyone heard of kinesiology, this kind of stuff? Yeah, good stuff. So I got in all this kind of stuff, and one day I found this kinesiologist who was particularly good, did a treatment on me, walked out, I was right as rain, completely fixed. So after that I thought, right. So now these days I'm empowered with my own health. I've taught myself, I pride myself in saying I know more than most doctors. When staff often get flus and they can't get fixed, I say do this, and this, and they're fixed in 2 days. Because I just studied laws of health. So although I still use experts like naturopaths and that, I now basically make sure that naturopaths and that they're working for me as specialists. I'm not putting my trust and empowerment in their hands. You see the difference? So I'll tell you something about accountants. Okay, this is something which I probably shouldn't tell you. They won't be happy with me telling you this, but When you think about it, do accountants want you to depend upon them? Why? Income, revenue, keep the business. But let me ask you something. At law, who is responsible for your tax return? You are. You're 100% responsible. If your accountant stuffs it up, who will tax office chase, you or your accountant? 100% correct. Will they chase your accountant? Usually not. Usually not. Okay, so who's starting to think it's important to be empowered in asset protection and your tax if you're going to be a serious wealth builder? Robert Kiyosaki in Rich Dad Poor Dad and Cash Flow Quadrant says straight out, if you're serious about building wealth, as much as you learn about your skill, like internet marketing or whatever it is, you need 3 things to be wealthy. You should write this down. 3 things you should put your education and focus. 1 is a skill or business you're putting your attention to. Whether it's trading e-minis, whether it's doing internet marketing, whether it's doing affiliate marketing, on, using Google AdWords, whatever it is. Number 2, you've got to have sales and marketing skills. Okay, so sales and marketing. You need to know how to sell your products and how to get joint venture partners involved. And thirdly, you've got to have knowledge of tax laws and business law asset protection. You can read it for yourself in Rich Dad Poor Dad. Robert Kiyosaki ended up himself paying thousands upon thousands, I think tens of thousands of dollars to get trained in accounting and the basics of law. Most really big, wealthy business people I know, all of them have a fairly good knowledge in this area. Although they have accountants and lawyers, more for delegation purposes and to work with them, they have a fairly decent knowledge themselves. So if you don't have a basic knowledge, you're taking a very grave risk in your business. A very grave risk. Because you don't know if your advice is right. With my health, until I got empowered, I spent an absolute fortune. I mean, I went to that many chiropractors and physios and specialists and chronic fatigue experts and new age healers and all kinds of weird and wonderful people. And once I got empowered and learnt the basic laws of health and universal laws, these days, illness is fairly straightforward for me to deal with. I'm very confident now that when something comes, and generally I can fix it or see it fixed pretty quickly. Likewise, really in our tax and asset protection, we need to be absolutely sure that when something happens, you're not just blindly relying on an expert or not knowing what's going on, because are you putting your assets at risk? I mean, I'm horrified to this day. I almost would guarantee you that most of you in the room, if I sat down and looked at your structures, in fact, I pretty much say, I've never yet found a structure without a hole. Never yet. One got very close 3 months ago, but I've never yet found a structure without a hole. And most structures are full of holes. So what do we do? As you probably worked out, I'm a lawyer, an accountant, a bit of an attitude. Would you agree? One of the reasons why I got on well with Jamie is we were into the same sort of fractional reserve banking and conspiracies and all that. Who's into all that kind of stuff? Yeah. It's very interesting stuff. We had a pretty good talk about it the other day. But I study as a hobby very much about the history of the world, what's behind things, what's behind a tax system, really out-of-the-box ways to slash your tax and make sure your assets remain safe. Recently, with one of my clients, he's got a really big problem with their assets. They've gone to different people and said they've been told they can't protect it. So I showed him a very clever way where they can magically make the money disappear and come back without a trace. Who finds that kind of stuff interesting? And how to make tax bills disappear with a magic wand. All legally, mind you. If you have the attitude, as Jamie says, there's always a way. So like, in your wealth creation, there's always a way. Would you agree? So there's always a way with your tax asset protection planning. So I want to hear you say it. So there's always a way. Here's a basic strategy you can apply. The straw man and person of substance, 1. Very simply, that's this. Now, I'm an accountant and lawyer and investment advisor, and I walk around speaking on stages and doing weird antics. Am I at risk of being sued? Yes? Okay. My wife basically is employed by the business but doesn't really do anything else apart from that. Is she at risk? Well, not really. Although it is a risk, it's very minor compared to me. So now let's go back to some common sense, as Grandma would say, okay? Who should control the assets, me or my wife? My wife, correct. Why? Less risk. Who should be the one who takes the hits and gets the bullets? Me. That's right. Why? That's right, because I'm the one, I'm walking around on stages and prancing about and doing opera singing and things like that. And I'm at risk of being sued. Well, my wife basically is not at risk of being sued anywhere near as much as me. So very simply, so you've got the straw man and person of substance. So, the straw man, the person at risk is who? Me and my wife. Me. So I'm the one who has to wear the bulletproof vest. Who's the person of substance? My wife. So let's just look at that again. So let's just say the reverse. Let's say my wife was a doctor and I basically stayed home and looked after the kids. Who should be the straw man, me or who should control the assets here, me or my wife? Me. My wife should be the one who's at risk. Is that all clear to everyone? You catch that basic principle? Okay. Believe me, I find about 80 to 90% in this room, I guarantee you, are not set up like that. Guarantee you. I've already given an example, Dick and Dora. The doctor is obviously the one who should be taking the bullet. Dora is the person of substance, home of the children. Example 2, now here's one for the single people. Who here is single? Good life, isn't it? Jenny is single and runs a financial planning company with 8 staff. Okay. Now, obviously people say, well, what would she do? I mean, she's got no one who can play that role. Well, a few things she can do. She could be both. And look, if she's both and uses a company and trust, and you'll see why the biggest secret of the rich is companies and trusts. Believe me. Companies and trusts are the best way to completely shield yourself as well as slash your tax, as I'll show you as we go on. So Jenny is both the straw man unless you can find the white knight. So even if she's both, a trust and company still gives her great protection. A white knight means she might use her son, if she's got one. She might use her best friend if they in partnership. She might use somebody else. So there are ways you can do it. So the question is, what are you doing? Who here realises already that we need to do something about asset protection, about their structure and their wealth? Yeah, a few. Now, don't use these strategies to avoid legitimate obligations to employees and creditors. In other words, asset protection is not basically, I don't believe it should be set up to basically help you be a bastard. In other words, to help you be somebody who does deals with people and then walks away from your ethical responsibilities. It's there, but you choose if you're liable or not. You understand? So if a government comes and sues you unjustly, it happened to a client of mine about 8 years ago, where they went to destroy his business. Because he was well set up, they couldn't touch him. It's about the power of choice. Okay, slash your tax by thousands of dollars. Who here wants to basically slash their tax by thousands of dollars? All your hands should go up. If not, you can give it to me. This will shock you to the core. Our beloved President, dear old George, or ex now. Here George is basically, because he's basically got to be out in about next month, so he's quickly passing all these laws before Obama gets in. Did you read about that today? To do with these things he wants to get in, that Obama had already said he wouldn't be bringing in. So Bush has jumped in quickly trying to pass all these laws before Obama gets in. So Obama's not happy at all. Because once they're in, as you know, they're hard to get out. Alarming facts about tax. Australia is the 3rd highest tax nation. I mean, would we agree Australia is a high tax nation? The average person pays 69% in taxes according to Ray Regan, the President of the National Taxpayers Association. Who's shocked by that? 69%. Because remember something, how many taxes do we have? We've got income tax, what else do we have? GST, which we all love, what else? Land tax. Now on vendors too in New South Wales. What else? Capital gains. What else? Stamp duty?
Wholesale tax.
Wholesale. And then of course our beloved payroll tax, my absolute darling. The tax that basically taxes me every time I give someone a job, I've got to pay more tax. Who thinks it's a wonderful way to encourage business to employ more staff? So when job losses start happening over next year, which they will in these times, businesses who employ staff are going to be penalised thanks to payroll tax, which, by the way, was meant to be removed in 1999 as part of the GST reform arrangements, which, of course, fate chose to ignore. Government compliance. The average small business spends 1 day per week in government compliance. So that means 1 day a week you're employing someone just purely to do government compliance. 150 per time. Is that a lot? 48% of businesses go bankrupt due to the ATO. Not paying a tax, being wound up, being chased down for integrated client base accounts, all kinds of things. Payroll tax. By the way, who's been through a payroll tax audit? Anyone? Oh, they're horrors. If you think the ATO is bad, go and have some deals with payroll tax. At least the ATO, they've got brains about this big. A payroll tax is more about this. I'm being a bit facetious in saying that. I mean, I work for the ATO and my brain's not quite a bit bigger than that. But no, in all seriousness, the lack of commercial sense absolutely astonishes me. I mean, I've represented clients against the payroll tax and they say the most bizarre things. My favourite one with the ATO, actually, this was an ATO one, was the ATO were convinced that one of our clients was basically taking cash and not putting it through the books. Now, who wants to know why they believe that? This is a classic. He basically was a car dealer, and who here has got merchant card facilities in their business? You know how to, like Visa, take 1.5% and all that kind of stuff? So if you're merchant, like if I take $1,000 from you, I got merchant, I'll take about 1.5%. So of course, they were taking 1.5%. Now his bank was different to most banks who charge at the end of the month. The bank would actually take the money out every time the money would come in. So only a net amount would come into the account. So rather than $1,000 comes in, $998.50 would come in. I don't know why, it was a weird arrangement. So the ATO were convinced he was skimming $1.50 every single time in cash. It took a year and a half to convince them that wasn't the case. And by the time we racked up about $50,000 in accounting fees and legal fees. It's insane, isn't it? 80% of business fail in the first 5 years. I've heard actually it's less now. Next 5 years, a further 80% fail. That's 96% failure rate. And if you take the 48% of the ATO, about 45.5% of businesses will fail in the next 10 years. Let's say in this room is 100 people. Let's say you're all in business. That means 96% of you will go out of business. And of that, 45 of you will go out to the ATO. Now, how's that for stats? Pretty bad, isn't it? We've got a progressive income tax in Australia. The more you earn, the higher the tax you pay. Now, for those of you who like sort of things a bit out of the box, this is actual fact. Income tax goes back to feudalism, which is where lords basically ran, manors and things like that, and peasants would go work their land. In exchange for the peasants working the land, the peasants would keep 75%, give their lord 25%. So a slavery type arrangement. So if you pay income tax, guess what? You're a slave. Who's glad to be a slave? You actually are. If you actually study the origins of income tax, the government is your master, you are the slave. But now isn't this interesting? What do we call government servants or government people? Public what? So who's the master? We are. If they're the public servants, we are. So who's their boss? So who tells them what to do? So when a government employee comes around your door, just say, look, you're not doing your job properly. Here's my orders for you. Anyone going to try that one? Believe me, I've had some fun. I've got out of parking fines and got out of voting and speeding fines. And one of my favourite was how I got to the census, because I decided I'm not going to do the census. I thought, this is ridiculous. I'm not going to give away my, all my life about my English and everything else and my, religion and sexual preferences or whatever else. I thought, this is stupid. So I just looked at some loopholes and I thought, aha. So they came round to me and I said to them, let me ask you something. When they gave it to me to do, and they said, sure. I said, if I was not a resident of Australia on the date in question, am I exempt from the census? And they go, yeah, if you're out of Australia that day. I said, no, if I wasn't a resident. So they said, oh, okay, so yeah, well, obviously you would be out of Australia if you weren't a resident. I said, well, if I wasn't a resident. But they said, yeah, you're exempt. So I said, thank you, I'm exempt, see ya. And they walked out. Now, I tricked them on legal wording there, because a resident means I'm a thing identified. Now, I'm not a thing, I'm a man. So therefore, because I'm a man, I don't have to do it. Who thinks that's really cool? It worked beautifully. One of the ones that some of my staff always love it when parking tickets come in the office, like when I get them, because they all laugh, they all know what I'm going to write to them. I write in my standard notice, just basically for the heck of it. I just do it, no matter what. And I write to them and say, dear parking people, and I put it on a legal letterhead, make it very formal. I've received your parking ticket, or you actually put your contractual notice. And I say to them, please, I need to order to verify the contractor, the person who's purporting to put a penalty notice upon me, in other words, you, I need to make sure you've got jurisdiction to do this. So first, I want the following information. What is your name? What is your company name? Can you please provide me with your ABN, your certificate of incorporation, the names of your directors and shareholders, the proof that you have legal jurisdiction to impose a ticket upon someone outside of your council region, because I lived outside the region, and please prove, but basically what you're doing is constitutionally valid. And let's write it to them. Sometimes they just waive it. They think, oh, let's get rid of it. But none of them have ever been able to respond to me properly. The other ones write back and say, you just got to pay it. And I write back and say, I'm happy to pay it if you can provide the proof, because I know they can't. They can't. It goes back to late 1988 referendums, where councils are actually public trust bodies, but they actually voted on the referendum whether councils should become statutory corporations. We voted no. Did the government listen? No, they just did anyway. So basically, the parking ticket system, a lot of our government infrastructure actually is illegal, because what they've done, think about it, they've privatised most of it. You know what I'm saying with privatisation? Now imagine if I came to you and put a $1,000 notice upon you to pay me a penalty and you'd never done business with me, what would you say? You'd say, well, I don't know you. I've never blooming dealt with 21st century accounting. You can rack off. So if someone comes and gives you a commercial notice and you've never done business with them, you can just say, well, look, I've done business with you, so thanks for the notice, but see you later. At the very least, it sounds good, doesn't it? You'd be surprised by how many things I've got out of doing this. Oh, I have a ball. I love it. Staff always gather around and say, oh, quick, Warren's got a new ticket. And they all come running. They all want to read my notices, my latest responses. It's great fun. See, being empowered and knowing your rights, believe me, it's fabulous. It's great fun. And I mean, we've done things like a year ago, my wife got awful service from a company we did business with, and they actually accused her of being a liar. She was really upset. And I said, leave it to me. And I got one of my lawyers, said, let's have some fun with them. The time we'd finished, we actually had the girl at the end of the phone crying. And basically gave full refund, where they said we have a no refund policy. And we said, we want a refund. He said, not getting it. So we just hit them with legal notices. And then we said, we're going to take them to fair trading, and we're going to do this, then we're going to go after them personally. Time we finished, had them on the end crying, and they gave us the refund. Who thinks I'm a mongrel? No, seriously, my approach is very simple. If someone, I'm actually very generous-minded and very generous-hearted, but if someone comes in and doesn't do right, my view is that's one of the reasons why law, if you actually study the history of law and accounting, it's actually to do good by people. Yet law these days has become more a milking system to milk the money out of you in lawsuits and litigations and overcharge you. Whereas really law originally was about fairness and justice and about truth. And so when I see injustice, naturally something in me says, no. Now I might add, I got a speeding fine a little while ago. I'd driven too fast in a school zone. I didn't realise, I did it inadvertently, I paid the fine without question. Why is that? Because there are kids in there. Me driving fast could have injured a child. So as far as I was concerned, I was quite comfortable taking that. But when I'm driving 80 k's in a 70 k zone on a clearly open road, and someone's hiding behind the bush with a ticket, or we've got a camera hidden behind the thing, I said, no. You're going to work for your money.
How do you get out of that?
Oh, that's for another session. Got it a few of them, bro. It's good fun. And same with tax. My approach is no issue again. Funny enough, I actually don't have a problem in principle with tax at all. Why? Do we live in a good country? Do we live in a prosperous country? Absolutely. Tax is a way of giving something back. It's a way that when we make our money, we give something back. So I don't have a problem in principle with tax. I have a big problem in principle, what I call, this is probably my philosophy. Imagine if I'm running a business and you all know that I'm a terrible manager and I waste money, I spend all my money like going out to pubs and taking our staff and getting drunk, we fly to Tahiti, we go first class, everything like that, okay? So I'm a totally extravagant. Would you want to invest money in my company? Okay, so if government's not managing your money properly, do you want to invest your money in them? No. So in other words, I don't have a problem in principle at all paying tax, but I think everyone would agree, and if you actually study the economic efficiency surveys of running a country, they all show that the amount of revenue raised from taxes is miles more than is needed to run the country. So where's the rest of it going? That's for another time. I did my research and found out, but that's for another time. Just to show you what tax can do to you, who's finding this a bit interesting? A little bit out there. $100,000 invested for 10 years at 20% per annum, 46.5% tax, that's your return. That's how much you'll have. If you set up a corporate structure, you immediately add an extra $231,000 to your wealth in 10 years' time. Who would like an extra $231,000 in 10 years' time? We all would. If you can get down to 0% tax, who wants to know how to get 0% tax? Okay, that's for Fiji. 1.378584 million. In other words, an extra $706,000 in your pocket. Now, if 20 years, look at the difference. By using a corporate structure, you add an extra $777,000. If you use a self-managed super fund, you've now got an extra $2 million added to your wealth. Again, who knows the stats that in 20 years' time, there's going to be 2 to 1 working Australians to pensioners. Right now, there's 4 to 1. So what's going to happen to pensions in the next 10 to 20 years' time? Kiyosaki and Trump have written a book about this exact problem. So relying on the government for your future, as Jamie's all taught you, doesn't work. And certainly your tax planning is a critical part to compound your wealth, because compounding interest is a critical part. So how can I save tax? Okay, let's look at some basic strategies. Business and investing is the biggest secret to get rich. Why? Very simply, it's this. The rich earn, they spend, then pay tax. The middle class earn, pay tax, spend. Which one are you going to be? That's right. These are the things that they use. Now, who wants to know some creative deductions you can get, which I guarantee you, your accountants will tell you can't get? Who's ready for it? Believe me, I say this every time, and I have people come up to me and go, but my accountant says you can't claim it. I said, that's what I just said. I guarantee you. Firstly is your wealth creation courses like 21st Century Academy and your internet marketing courses. Now, who would like to know how to claim their internet marketing and their wealth creation courses from the Academy? Out of interest, who's been told by the accountant they can't claim it? Anyone? A few? Normally more than that. Normally more. Maybe there is more. Normally you get like a lot of people. The short answer is, if it relates to your income earning, you can. But if it doesn't relate to any income you're earning right now, can you claim it? Can you? The answer is yes. There's a rule called the black hole provisions that allows you to claim it over 5 years. And a bit of creativity. Remember, what's marketing? Is it an illusion? When you're selling a product to someone, how you present the value, would you agree, makes all the difference. If you get a house, the same house, and just say maybe spend 10 grand to redo the lawn, everything, can that add an extra 40 grand to the house? Is it the same house? You just created an illusion. Do you think the tax man can also be fooled by an illusion? In other words, how you present the ruling. You don't have to lie. You can tell the truth, but how you present the case can make all the difference. Even though now I'm mainly speaking and don't have much time, every now and again the blood burns within me again and someone asks me to represent them against the ATO or ASIC and I say, yeah. I represented someone recently against ASIC. And I love it. I love when I'm sitting in the room with them, because I just go in and I disarm them because I'm very warm. Because at the end of the day, we're just people like you and me. And normally people who are pretty miserable, don't like their jobs, they're on a low salary and would love to get out, but they're too scared to leave their jobs. So I go, and how you going? Have a good chat and yabbering away. And okay, so look, with my client, obviously we want to get the best result for them and the best result for you and get a win-win for you. And they go, yeah, no, absolutely, we agree. And I said, so great. So let's set the rules of engagement up front right now. And then we just talk. And one of the great things to know with tax and with ASIC is legal professional privilege. Any communication you have with your lawyer, you can claim privilege and they cannot see it. Who thinks that's a really good thing to know? That's right. So, of course, ASIC in the investigation would say things, I'd say privilege. Privilege. They were prosecuting him, or they were looking into him to see whether they should prosecute him for taking funds unlawfully. Because he basically raised money without a license. And he was absolutely crapping himself, seriously. He's an older guy, just a guy who wanted to help people get ahead financially. He was so scared, he's hardly sleeping at night. I just said, relax. I said, you'll be fine. And went in there, all I kept saying was privilege, and I recreated the picture for him. So by the time I finished creating the picture to ASIC, it came out that this guy not only didn't raise it legally, but was there to help people and followed and everything else. And then I just claimed privilege over any questions that were a little bit hair-raising. At the end, they got up, shook hands, and said, Mr. Black, thank you very much. You won't be hearing any more from us. Do you think our client was happy? See, easy. If you take authority and you have no fear, there are no issues with your authority. I mean, that's one of the things still even our staff have to come to grips with. It's because they say to me, you just do these things. They said, why? And I said, because when you master fear. My favourite movie in the whole world is V for Vendetta. Who's seen that? My favourite movie in the world. Matrix is probably my second, but I love that movie. It's an illusion. There's some scenes in that movie, I wouldn't tell you because it would ruin it, where you actually realise that everything you see before you is an illusion. And when you see that, you have no fear. You don't fear anything. And so when I'm going against a government department, I just know, all it is a fictitious entity that's being created in a corporation, and there's just people behind it. And somewhere behind it, there's a wizard, like the Wizard of Oz, who controls and runs the strings. So if you can get to the wizard, you'll get the result you want. So wealth creation, car expenses. Now, you can claim up to 5,000 Ks motor vehicle or 12% of the cost of the car without any receipts or substantiation. Now, who's excited by that? So pretty much, you can claim that. And most of us use our car to some degree for work or business or something else. And believe me, the importance of having accountants who understand this cannot be underestimated. I cannot underestimate it enough. Because who here has had the experience to get tired of trying to argue with their accountant and just give up in the end? Because they're the expert. Anyone had experience? Yeah, most of us will, because they're the professional, we do what they say. But one, you want to know enough to keep your accountant accountable, and you also want to work with accountants who are going to be congruent with your wealth goals. Correct? Home office expenses. Most of us use our home sometimes, don't we, for work? Depreciation of furniture, phone, internet, electricity. Depreciation, who here uses computers for trading or something else? Depreciation. Travel to your accountant, your rental property. If you've got a rental property, getting a building write-off deduction for the cost of the building. Software, I mean, if you're doing internet marketing, your software, your domains, your hosting, your Google AdWords, your internet courses, your affiliate products that you buy, the sales letters which you get mastered for you, all this kind of stuff. Everything. So my rule is keep all your receipts. Keep it. Even if you've gone to the drug shop, keep it. Even if you've gone and got drunk, keep the receipts. You never know, you might be able to claim it. Carry forward losses, again, you're trading, things like that, because if you do make losses, a lot of accountants say, you can't claim it. Again, depending, you may be able to claim it. Prepaying expenses before 30th of June. If you've got a big amount, and if you've got a big tax bill this year, but not next year. Wash sales. Very simply, let's say that who here suffered some losses in the share market in recent months? Again, you may have a big tax bill before 30th of June, you sell the shares, realise a loss, and with a bit of planning, again, you can wipe it out, buy it back afterwards. Got to be careful with that, but there's ways you can do this. Lots of things you can do, it's creating the illusion. Now, A magic trick. Who wants to know how to turn a family home into tax-deductible debt? Okay, you got an $800,000 house with a $300,000 mortgage. You've also got, say, a term deposit or money in cash of $200,000K. Or let's say a shares or whatever else. Okay, so is that mortgage tax deductible at the moment? No, it's family home. Correct. So let's just say that you take the term deposit and you pay off the mortgage down to $100, $100,000, okay? You then borrow a further on the line of credit or whatever else, $200K to purchase shares or trade or whatever. Is that now deductible? Because for income purposes. So suddenly, by a mere change of scenario, you've made that tax deductible. Is that good? One of my favourite little ones we've done for clients. Just the way you structure it. You also can rent your house back as well. Now, renting the family home, it's great for asset protection. I mean, my family home is held in a trust. I own nothing in my own name. Nothing. So the family home's basically in a trust. The beauty of that too is I'll rent it back. Can I claim negative gearing? If you do it right, yes. Now the ATO are a bit funny about it. You've got to make sure you do it right. There's got to be a few other factors, but if you do it properly, you can claim it. Now, the cons, loss of capital gains tax, and you pay land tax in a trust, especially in New South Wales. That's to be aware about. However, who likes ways to get around things? Loss of capital gains tax, if you have a long-term lease back from your trust to yourself, there's a loophole, which means you may be able to not lose your capital gains tax exemption, but I never said that. Is this all good stuff? Really, because when you think about it, shouldn't your accountant be your wealth creator, helping you to actually create wealth and be proactive? Rather than sort of behind the eight ball and you're running to them trying to sort it all out. Would you agree? Keep your records. Why? Audits, believe me, if you've got the ATO sitting there at the other end giving you a hard time, you'll wish you kept records. I can tell you that now. When I worked for the ATO as an auditor, who thinks I was a really nice auditor? Who thinks I was horrible? You guys are mugs. Yeah, I was a bit of both. I mean, I did audit someone once and I suspected they'd done their logbook fraudulently, but they just basically done it up like just before that we audited them. So I got forensic examination. I personally drove out the car and measured all the distances. And yeah, got forensic to see if the handwriting was all done at the same time or done over a period of time. And also got serial number analysis to see if the logbook was published more recently, and it was. So of course I had her in the interview and I was being very nice and asking her, was this logbook definitely done in 19 whenever? Yes. And then I pulled out all the facts and saw her go white. And I go, but now I'm working for you guys. Okay, so we've looked at the basics of asset protection and tax planning. We've looked at how to slash your tax by thousands of dollars. Now we're going to bring it all together into a nice picture to save tax by thousands of dollars and keep the greedy, golding scumbags far from your wealth. Are you ready? Are you ready to be unplugged? Are you ready? Yes. Okay, good, we're awake. Okay, companies and trusts. Now, this is the biggest secret of the rich. Okay? Companies have two main players, directors, shareholders. They can slash your tax. Let's show you how. Let's show what a company is first. Sorry for those of you who already know, but this is the play school version, but we've got to make sure everyone here understands it, okay? Who here likes the play school theme song? Anyone? There's a bear in there and a chair as well. You meant to laugh. You must like my singing. So let's say I set up a company, Warrent Proprietary Limited, okay? Now, that's me, okay? Can you see the difference between the two? There's me and there's a company, okay? Two separate entities at law. So you can contract with Warren Black or you can contract with Warren Black Proprietary Limited. Is there a difference? Yes. Absolutely. Because this thing is fictitious. Let me ask you something. Could you go out and have lunch with W Black Proprietary Limited? No. Could you have lunch with me? If I let you, yes. I'm very fussy with my food, by the way. I like green tea, and I have staff who refuse to go out for lunch with me because I take 2 minutes to get my order and I change the menu every time I go. So I actually have one staff member who won't have lunch with me virtually when I go out in seminars. Pretty sad. So there you go. Now, directors are the people who run the company. Shareholders own it. Okay? So directors run it. Now, remembering from my situation, just a little bit of a see if you're on the ball. Who's at risk out of me and my wife? Me or my wife? Me. Why? Because I do all things like run around on stages and do law and accounting and... Yeah, that's right. My wife is not. So who should own the company? My wife or me? Correct. So what should she be, the shareholder or director? Spot on. Who should be the director? Spot on. Is this all easy? Not hard, is it? Did your accountant tell you this? No. Company. So what does a company do? Problems of companies. Hang on a sec. Missing a slide. Oh well. Before going to that one, the benefits of a company is 30% tax. It does straight away. Now, we showed you with the compounding wealth that, let's say that you had 100 grand invested over 20 years, the difference between 46.5% and 30% was 841,000 compared to 1.6 million. Is that a big difference? Absolutely. So you've also got limited liability, which means if I sue the company, as a director, I am basically pretty much free. Okay? So if the company gets sued, then I'm not liable for the debt if it's a $2 company, which means only $2 sort of settled in shares. Now, there are exceptions to that rule, by the way, but general rule is no. The big exception, just to be aware about, is insolvent trading, which means if you're running a business for a company and you start to have problems meeting cash flow, which happens in most businesses, and you get into really serious trouble, and you don't actually appoint an administrator or declare it to ASIC, and then later on the company goes down and people have actually, you borrowed money from people in that meantime, they can actually come after you for insolvent trading, and not only can you be personally liable for those debts incurred in the meantime, but you may be able to be prosecuted too. So just be aware of that one. So limited liability, 30% tax. The problems of companies is tax is capped at 30%. Now, let's just say that you run through a company and only make 50 grand, and you've got, let's say myself and my wife. Will I pay more tax in the company? Yes, because the marginal tax rates up until about 80 grand are only like 15% and then 30% up till 80 grand. So pretty much the first 160 grand earned by me and my wife, we wouldn't want for a company, okay? Secondly, the flexibility of splitting income. Now, you can split income in a company through having shareholders, but the problem is they're fixed. So if my wife and say my best friend were 50% each shareholders, pretty much they get the dividends automatically. I can't change that. Now, I can pay salaries, everything else, but you're a bit inflexible. Thirdly, the biggest problem is getting money out of a company. Now, this is something that most accountants don't tell you. You've got this horrible rule called Division 7A. Very simply, if Warren Black Proprietary Limited makes 100 grand in a company, now, if I pay it out as a dividend to, say, my wife, for example, let's say that she's already paying the maximum tax, even though the company's paid 30%, she then has to pay an extra 16.5% tax. So the way people got around it in the past is they would lend the money out the company. Why? If I'm the Commonwealth Bank and I lend you 200 grand to buy a house, are you taxed on the 200 grand? No, you're not. You're not taxed on the loan receipts. So you send out the money, no tax. The problem is now, if you do that without a loan agreement, a special type of agreement, you will end up paying tax of 76.5% tax, up to that amount. So you've really got to make sure it's planned properly, because you can be absolutely stung. So when do you use companies? Contractors use companies, is good. Trustee for a trust, which I'll show you shortly for asset protection purposes. And floating to go public. So if you're going to go public, you may want to use a company rather than a trust. Otherwise, you really want to be using a trust. Very simply, trusts go back to Middle Ages and the Crusades and are very popular since the 1970s. Why? What happened in the 1970s? There was a lovely bloke by the name of Gough who got into power and decided that rich people and people who made money should be giving up 66% of their money in tax to go basically to people and give free education. So lawyers and others said, right, well, we can't have this. So they started using trusts, which formerly were used only to protect assets during the Crusades when they went away to fight the knights. They basically started using for tax planning. And pretty much up until today, trusts are still used for tax planning. The government tried to remove trusts in 1999, but in the end they didn't succeed. Why? All the tax concessions? Anyone want to guess why? All the pollies have them, that's right. And the farmers too. Let's distinguish between two types of trusts. Unit trust and discretionary trust. Unit trusts are like companies. So really they're for two or more people at arm's length. Now, why would you use a unit trust rather than a company? Even though they're virtually the same thing, in that you can own... There's two main reasons. One is that certain managed funds and that they prefer unit trusts. And secondly, the other big reason too is certain like structures or whatever else, like development or whatever else, or investors going in don't like unit trusts, they prefer companies. So big development deals, some developers won't be comfortable going through a unit trust. But a very big reason why I'd use unit trust is, and this is something you must not forget, never, ever, 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 ever buy a property for buy and hold through a company. Why? Because you pay double the capital gains tax automatically, because you don't get a 50% discount stock take amount, which you get with every other structure. And when you pull the money out, you're going to be paying full tax anyway if you don't do it properly. So never, ever, ever have a buy hold property in a company. Okay? Remember that if nothing else. Discretionary trusts. Very simply is this. No one owns the asset and the trustee has full discretion who gets the income. The best way to show a discretionary trust is a visual demonstration. I need 3 volunteers. Great. Come up the front, yep. I need 2 more. Come on if you're good looking. You're good looking, you can come. We need 1 more. Thank you. Everyone's a bit shy here. What's your name?
Angela.
Angela, hi.
Hi.
John.
John?
Okay.
And?
Charlene.
Charlene. Okay. I'll get you to move over here, Angela. And Charlene, get you to move here. Okay. And actually, I'll get you to go in the middle here. What's your name again, sorry?
John.
John in the middle. Okay. We're going to create a discretionary trust, okay, for a family, okay? So this is the family. Basically, dad, mum, kids. Okay? So this is dad, mum, and kids. Now, what happens is I'm the settlor because I'm the accountant lawyer out of the process, okay? Why? You want someone out of the process because there's a special law which says you can pay more tax if you don't. So I settle it for $5 to avoid stamp duty or keep it lower. And I give, say, the valuable asset over to trustee, okay? Which, let's say,
I'm the mum.
your dad.
Dad.
Yep.
Okay.
But so dad, let's say, is the one at risk. He's controlling the trustee company, okay? So we've got a trustee company here. The beneficiaries, let's say, basically is the children over here, okay? So you're beneficiaries. Now, John here, his mum, is the appointor. Why? Because mum's not at risk in this situation. So what that means very simply is this. So, Charlene?
Yep.
Charlene can basically distribute any of the money in the trust. We've got an agreement between us which says that any money that they earn, the trust earns, can be given to anyone in the family at your leisure who you want to, but you have no requirement to give to anyone. Just have to give to someone. Okay? And also, mum ultimately controls the trust, okay? So that means that you can basically fire Charlene any time.
Sounds good.
Sounds good, doesn't it? You got the control. So, very simply, who actually owns the asset in situation? The trustee, but actually no one really does. Because if you sue Charlene for holding the assets, what's she going to say? Well, they're not mine. I'm holding them on trust for these other people. And then straight away, the beneficiaries, let's say Angela, what's she going to say in terms of anyone wants to sue her? Well, no one's given me anything yet. And then, of course, let's say that Charlene does get sued. What's John going to do? Sack and move in. Is that clear? Thank you very much. Give me a hand. So the trustee is the puppet, the appointer is the puppet master. Okay? Think of it this way. It's a bit like the 24-year-old driving the Ferrari, gets pulled over a lot of cops to confiscate. What's he going to say? It's not my car, it's dad's or mum's. Okay, let's have a look at a quick example here. Kevin and Julia have 3 children, okay? 118, 114, 13. Kevin earns 100 grand in his business in his own name. Julia earns no income. Wayne earns 8 grand per annum selling drugs. John and Peter earn nothing. Excuse my weird sense of humour. I do my wife's head in. She goes, she says to me the other week, she goes, I'm really straight and I've married this really weird bloke. And I said, I know. Kevin makes 70 grand profit doing an internet marketing venture, okay? So he comes along here, gets excited, makes 70 grand. Now, if Kevin basically done it in his own name, he'd pay 29 grand tax, okay? Which is what most people do. Rather, Kevin sets up a family trust quick smart. Starts from day one in a family trust. If you're going to do internet marketing, do you expect to make money from day one? Absolutely. If you don't, why are you doing it? Correct? You don't go into business to fail. If you do fail, you deal with it when it comes up, but you don't go in to fail. If you do, don't go into business. Kevin makes distributions, which I won't go into it in great detail. It's just to do with tax brackets and dodging, manipulation of figures, all legal. The only 2 things I'll point out is the 1667 to John and Peter, the under 18 children, is because you can only give up to that before you pay 66% tax. It's to keep people from giving all their money to their babies. 7 grand to his church or charity. Now, here's an interesting one for you. Is a church or charity tax deductible normally? A church is not. Most people don't know this. If you give money to a church, unless you're the Mormon church, which got some exception for some reason, who knows, you basically can't claim a tax deduction. If you do it through a trust, you can. In fact, you can give to any charity approved by the ATO or not and still claim a tax deduction. Now, who thinks that's pretty sexy? It's interesting, I've often thought about, you've got tax intelligence or tax secrets of the rich, You could have sex secrets of the rich. Why? Because tax and sex go hand in hand. Do you know why? Anyone know why? Well, you want to reduce your tax, increase your sex, am I right? It's my weird sense of humour, sorry. Just sounded good anyway. I want to see if you're all awake. So what's the result? Julia pays tax of 3,670. Wayne pays tax of 4,290. No tax for church, none for John and Peter. They truly have earned, spent, and paid tax, 7,960, a $21,090 tax saving. Now, who thinks that's sexy? And that's a simple example. Obviously there's different scenarios you can work with, but all of them you can start with the right creative accounting or legal, get that. Now, if Kevin had a large income which he couldn't distribute without a lot of tax, he'd use a bucket company. Watch out for that Division 7A, that horrible loan agreement thing I told you about. But very simply, let's say that Julia earned $100,000 as well. So in other words, both Kevin and Julia have big income. Then what they can do is use a bucket company. That means that 30% tax is only paid. So who remembers that by paying 30% rather than 46.5% tax, you're better off, correct? You can compound more money. So then they can do what's called a bucket company. By the way, there's a very nifty trick to avoid those loan provisions in Division 7A using your own internal bank or financing company. So for those of you who do property development or all kinds of things, there is a way around it, okay? I won't confuse you about today, but be aware, there's very few accountants who know this one, trust me. Most of them I've even mentioned to said, you can't do that. I show them the law and they go, oh. Self-managed super fund, another asset protection thing, really important to have this. Especially right now, who's seen their super balances going on the toilet? A lot of you. Would you rather have had control of your own superannuation, at least if it goes down, the only one you can blame is yourself? Correct. Self-managed super, a must. If you're going to be doing trading or e-minis or anything like that, or even certain, internet marketing, you've got to be careful doing that through self-managed fund. Most accountants say you can't do it, but in actual fact, if you read the case of Scott, it shows you can. You're just going to be very, very, very careful. But your self-managed fund, you can invest, you can take control of your own wealth. Remember too with superannuation, what happened when I showed you the difference between 15% tax and 30% tax? $2.9 million of wealth compared to $1.6 million. Very big difference. And by retirement time, and by the time you hit 10, 20 years' time, you'd all agree you'd want to have a pretty good balance sitting in super, correct? Absolutely. You want it in super because as you hit towards 60, you can start salary sacrificing all of your money to super and pull out a pension and pay minimal tax and just pay 15% tax in the fund on the earnings. And then after 60, all of your assets, your properties, anything else will be tax-free. So you can now buy property in your self-managed fund. It's changed about a year ago. You can buy a property and borrow. Who thinks that's really cute? So you can buy property, virtually anything now you can do in your own name, you can do through super fund. So you're basically getting growth, and if you hold on to it till 60, tax-free.
Can you live in that house?
No, absolutely not. There's certain rules. You can't use your super fund for anything personal enjoyment. So if you buy artwork as investment, you can't review it. If you buy wine, you can't drink it. It's pretty strict on that regard. Apart from that, it's fantastic. So self-managed fund, absolute must. Pretty much make sure if you're going to be doing trading or your super's right now sitting somewhere else getting destroyed, the very least have a chat to us and find out ways where we can basically put you in a self-managed fund and make things happen for you. Offshore, be aware in internet marketing, there are offshore opportunities, especially if you're going to be selling products globally. There's tax loopholes and laws and all things 100% legally. It's only, the government hates it and they use the media to put fear into you about Operation Wickenby and all that. Operation Wickenby, very simply so you know, was guys who basically didn't just put money offshore, they created fictitious false deductions in Australian tax return to also reduce their Aussie tax. Now, do you think when you start stealing from the government get annoyed? Yes, so that's involved. But believe me, Section 264A, rather than 264, is with an audit. If you get audited in Australia on onshore records, you have to give it all up. Everything. In fact, the Citibank case shows the ATO can walk in, raid you. 37 officers walked to Citibank and raided their premise at 7 a.m. in the morning. No search warrant, nothing. When I had my Section 264 card, I could walk up to a business and say, need to see all your records. I'd walk up, knock on the door, they go, oh, no problem. So they'd bring me through. Police have got limitations, search warrants, things like that, but not the ATO. However, Section 264A, if all your records are kept offshore, for internet marketing, they have no legal requirement, according to the Falding case, Section 264A, to force you to bring the records back onshore. Who thinks that's really nifty? So I've mentioned about companies, and now I mentioned about trust asset protection. Now, companies who worked out, let's say my wife and I, who should be the appointer of the trust who controls it, me or my wife? My wife. Who should basically be the trustee at risk, me or my wife? Me, through a trustee company. Is that clear to everyone? So Jack and Jill decide to use trust to hold their assets, not their personal name. Jack is a doctor, Jill stays at home. How are they structured themselves? Again, who should be the appointer, Jack or Jill? Who should be, in other words, control the trust? Jill. Easy. Multiple structuring. Just be aware of this. Make absolutely sure that you separate your different structures. I'll show you why. If you're doing an internet marketing business and you also own property, what would happen if you did it all through the same trust and you got sued in your internet marketing? You lose everything. So your internet marketing and your property should be kept separate. Is that clear? In my case, I've got, like, I say, a law, accounting, financial planning firm. Do you think I have separate companies for each? Why? If I get sued in one, the other ones remain intact. If you want to go one step further, you can do what's called a landlord strategy. So let's just say that you've got a business, you've got valuable IP or intellectual property you want to build in your business, you own the intellectual property over here, you franchise it back to your business. So if somebody sues your business, who owns the IP? Your business or someone else? Is that good? I call it the cookie jar strategy. I'll tell you why in a minute. Same for a property. If you've got business premises, should you hold your business premises worth $5 million where it can be sued, or in another structure and just rent it back as a landlord? Who thinks that's really cute? See? Just really thinking out of the box. Cookie jar strategy. I've got 4 boys. I love organic chocolate mint biscuits. I would come back after buying them 2 days later and there'd be no biscuits. I'd say, where have my bloomin' chocolate mint biscuits gone? My wife would say, you got 4 boys. So, right, I need an asset protection strategy for my mint biscuits. So I created this beautiful asset protection strategy. I created a cookie jar which was on the bottom thing, which basically had all my biscuits. But then I had the real cookie jar hidden away with all the good biscuits. So all the biscuits that they could eat, I put in that one. The good ones I hid away in another one. So the boys would come, see the biscuit jar, see it was empty and walk away. My assets remain safe. Who likes that strategy? For parents, you just learned something more. You've learned about parental control. Absolutely. What if my accountant has totally stuffed things? It's something I can do. You can transfer assets, but be aware of stamp duty. Cross-collateralise, you can take bank loans over properties. You can basically do that. E.g., let's say you got a property worth $1 million, okay? And you've got no debt on it. You're buying another property worth $1 million through a trust, okay? Why not borrow or buy the property for $1 million here, but get the security taken over this property? So if someone goes to sue that property, is it worth taking now? Not really, no, is it? So you can do that as well. Finance company, that's what Henry Kay did, basically a company which had mortgages back over assets. So you can create mortgages and all kinds of other things. So there is something you can do. What about the family court? Can I keep those dirt balls away from my dosh? They can break trusts and companies, as can our beloved child support agency. So they can go through it pretty easily. There are ways, but that's beyond saying it. So a general rule, I'm not really big anyway, unless it's something pretty blatantly unjust of trying to set things up to avoid legitimate obligations in that situation. Asset protection is about, fairness. Prenups you can do now in Australia since 2003. Is insurance necessary? Yes, you want to make sure you've got your insurances in place as well as your structures. Why? If your rental property, you get sued in your rental property and you've got insurance, that could pay it out all over and done with. If it doesn't pay out, at least you know you've got your own structure in place to cover you. Is that fair? So you've got a 3-tier structure. First, like 3 firewalls on your computer. First, they hit the insurance company. If they can't get through that, if they get through that, they've got the company. If they get through that, they've got the trust. By the time they've finished, it's a bit like the car thief going to steal a car, and the Porsche's got so many alarm, he'd rather go steal the another Porsche or Commodore with no security. Life, TPD, trauma, income protection. Very simply, make sure you get your insurances looked at if your situation where one of you in your relationship has got lesser income or reliant on the other one, to make sure that they're not left with debts or properties or things that they can't cope with. Okay, another asset protection thing, hands up if you don't have a will. Pretty much most people. It usually happens. The fact is, can the mongrels get at my family after my death? Well, they can without a proper will. Most people don't have a will or it's totally inadequate. Okay? One story here, a client of mine, $250,000 house her husband owns, husband dies, she's on Centrelink pension, no will. She basically goes to get the house, finds out because there's no will, 75% goes to her, 25% goes to 2 brothers, but he hasn't seen for 25 years because they fell out. She can't get a loan, she has to sell the house. Because you don't automatically get it if you're a husband or wife from the other party without a will. Okay? So having a will. Very important for will, tax asset protection. You want a bloodline will or 3-generational will. Basically, for example, if you've got a will, a normal will, let's say that you own a number of properties and the children get them equally. If the children start shifting assets among the estate or the family, they'll pay lots of tax. Because the government says, well, you basically transferred assets, So now you pay stamp duty and capital gains tax. If you've got a bloodline will, guess how much tax you pay? 0. Is that worth knowing? Family, same with insurance super policies. The way you structure them in a will can make all the difference how much tax you pay. Family court. Who wants to make sure that the family court can't touch your estate through a son-in-law or daughter-in-law? Absolutely. Same thing. You can structure special trust to keep the family court out. Bankruptcy. If one of your children goes bankrupt, your estate will end up in the hands of creditors rather than your children. You want to have that protected? Bankruptcy trust. If you're in second marriages, you want to keep a will challenge away. Very easy ways to avoid a will challenge and make sure your will can never be challenged. Does that interest people? Especially in a second relationship. So I won't go too much on the will, but that's basic issues. If you don't have a will or if you've got your current will, I guarantee you 95% of wills that are here will be inadequate. In summary now, don't hold assets in your own name. Don't do business or internet marketing without a structure. And don't do investment without a structure. By contrast, use a company or trust for your business and investment. Have your right structure for your internet marketing and your trading. Use multiple trust structures like there, separate your trusts. And use your superannuation fund to build wealth. So now we're going to move forward and basically close. And just show you how 21st century accounting can help you moving forward. Pretty much what we do companies and trusts. So pretty much if you know you need one today, we've got forms at the back where we can get them. Now, we've got companies and trusts and self-managed funds. So setting them up, the thing with us at 21st century accounting, it's a full service, which means you don't get the structure, you get everything done for you, you get explanatory material that teaches and explains everything to you, you get unlimited support and queries, you get pretty much what you need to make that work. So you don't get given a car that basically you can't drive. You get given a car and you get helped how to drive. Very important. Tax returns, a big one here. Who wants their accountant to be a wealth creator in their tax return rather than a bookkeeper? Okay, pretty much that. Let me give you an example. You can spend $400 bookkeeping fee with your accountant and you get $1,000 back. If you paid $5,000 and got $15,000 back, would you be happier? Is it worth it? Absolutely. That's how we work. We've got some pretty good testimonials with clients and that, lots of them, where we've been able to increase because I tell you now, we go right through tax returns thoroughly and we do second levels of review to find creative solutions. So we don't just get it in, get it out. It's actually a very tedious process to make sure that value is added to every return that goes out our door. Why? Because we want to be the premium positioned in the market with tax returns. So if you want the cheapest accounting firm, we're definitely nowhere near the right one. Not even close. If you want the best value guaranteed, pretty simple. And magic tax planning. One of the things we love doing is sometimes we say to clients, you show us your tax bill, we'll get rid of it. If we can't, we won't charge you, depending on the situation. Who's intrigued? Right out of the box, believe me. We've got some stories. Recently, I had one of our clients actually just simply perfectly 100% legally had never got more than about $4 or $5,000, got them back $17,000. We ended up paying about $5,000 for the return. Were they unhappy? No, because they only thought they'd get $4,500 back. But by the time we'd finished and worked a lot of extra hours to get that return up, bang. We've also got a special premium package that we're offering today. This is pretty much new and hot off the press, okay? I only offered it for the first time actually a couple of days ago, so it's completely hot off the press. What this is for people who know right now, but taking action, okay? Because I'm a big believer in rewarding people who take action immediately. I was at a Peter Spann seminar years ago when I was miserable. I was working in a job. I was a top tax lawyer in a big law firm, hating my life. I go to this seminar. He basically said the person in the room who takes the action and can inspire me the fastest will get a prize. Huge room full of people. I walked away with $1,000 cash. Same seminar. He even put on a fancy dress party, but 2 hours notice, and said the person who has the best costume wins. And everyone was whinging because he's given us 2 hours notice. I basically, on a Saturday night, when there's no one, got a cab driver to go around, find a costume, bring it back for me. Won the prize. And many a time by taking action, because believe me, when opportunity strikes, who gets the best deals? The ones who take action? Yeah. There's a principle university that people get rewarded. So if you know you're ready to go today, and again, I'm not interested in pushing people, it's very simple. Some say, yep, we want to go talk, find out more. Some say, I'm ready to go today. So what we offer is this. You get a full package, a consultation with an expert, unlimited. Now, not like in the past we used to do 1 hour, unlimited. So pretty much as long as we need an hour and a half, 2 hours even, to go through everything in your affairs and make sure that everything is in order. Which means you can stay with your current accountant, you can move across, it doesn't matter. It just means we will go over and give you a second opinion or give you an opinion and make absolutely sure that everything's properly in place and then give you a written plan to confirm everything to move forward. So you pretty much walk away with a plan, but you will walk away with peace of mind. Also included, I'm throwing into that one, my Secrets of the Rich product. Now that's basically 20 hours where you can hear my melodious, magnificent, beautiful voice speak, which I just go into a lot more detail on the concepts we've spoken about today. There's a bonus set which is called the Money-Making Secrets of the Rich, where I'll actually interview a few experts and go right into the ways that they made their money. And fascinating stuff, including a 23-year-old guy who's become a multi-millionaire buying property and shares and following amazing strategies. There's one where I talk about my business. There's another one on that one where I actually talk about the laws of attraction and quantum physics and how I apply that. And the guy who recorded it with me said that was his favourite CD, where I talk about spiritual laws, mindset, law of attraction, and how you can apply it practically in running a business and not theoretically. And then I've got a CD, which I did 6 months ago, before all this happened, which is almost eerily psychic now, where I talked about where markets are going in government. So that's thrown into that too. Not just that, but basically I'm going to just throw this in as well. Anyone who basically signs up pretty much today, you also get, last week we did a 4-hour DVD or presentation where I teach some of the up-to-date asset protection. I go into details on audits, special tricks for audits, everything. That gets basically put in no extra price. So what that is Secrets of the Rich. Basically, I've sold out quite a number of events now for $297 for the full product. You get the audio CDs, the transcripts, everything. The consultation, an unlimited consult, basically, you're looking at about $1,100. Plan of action, to write one up, we've always basically done about $1,500. And what I'm also going to offer today as well is a personal sign-up. What it means, now that one's only available for up to 10 people because I don't know otherwise. It means although you'll speak with one of my staff, I'll personally go through the plan after I've done it, and I'll make absolutely sure that plan, I'll come up with my own creative tricks to give you massive value. Okay? Now, what I'm just going to charge is $2,997 for that, or upfront $1,297 plus 2 monthly payments of $997. So pretty much just reiterating, what you get is a full plan. You get a full structuring plan. We go through everything. So pretty much you can walk away with total peace of mind knowing. So in summary, the two options you've got, if you basically just want to get more information and find out a little bit more about us, speak to Anup, we can get more information, there's forms and everything else. This is a premium package for those who are ready to take action today and really want to get the benefits of all that. But again, we want to give premium value and really help people, because the reason that I got involved in this industry initially, I have to say, was because of my frustration, so to speak, with the professional services and not giving people high value, and basically being more bookkeepers and not properly planning and really getting people genuine value. And that's still my 10, 20-year plan to see a radical reform in that industry. Who's enjoyed today? I want to thank you very much for being an absolutely fantastic group of people. And I look forward to seeing you for many days and many years to come. Thank you.